Here's a noon video for October 30th, 2013 on the S&P 2-day chart. I'm actually zooming in on the 2-day chart today. We have ABC, which touched the C wave low. A equals C would have been 1768 and dropped a little bit below that, but that's fine. Best case scenario is that we find a low in this C wave ABC and then reverse back to the highs. Today's a Fed meeting, so there's going to be a really wild reaction, as usual. It'll be a really wild reaction, but it's not really an important meeting since we got a lot of stuff out of the way the last meeting. But at 2:15 p.m., expect some fireworks, like to the upside and downside, either direction. It's usually really crazy. But intraday, I think S&P is trying to find a low here, C wave. Trying to find a low in the C wave. So we're at the lowest point of C wave length, so this could actually reverse. For the Dow, that's A equals C in the Dow, also A, B, C. So we should find, I'm guessing that in the next like 10 minutes or 30 minutes, it'll reverse and go positive in the Dow. For NASDAQ, that's A equals C also. A equals C. Yeah, so basically, this is perfect A equals C. It's like A equals perfect C. S&P 10-day chart. Let me go back there. Let's zoom in on that 10-day chart. Yeah, the grinder is still pretty intact right now. Still have a grinder. Basically, my target is around 1803 in S&P. So if this grinder remains intact, the zigzag is probably going to be bought at this point. Worst case is a 3 that tests 1760, but I'm not leaning towards that scenario. I'm leaning towards ABC because this grinder is really dramatic in terms of how it's grinding. Because when you have this little incremental moves up in a slow grind, it usually turns to something really crazy. So I'm gonna be holding on to my positions. That's a wrap.